Mars Catalog believes we are on the cusp of seeing a ChatGPT moment for Tesla and full self-driving. This is actually something I talked about 3 months ago. I like his take on this. I want you guys to hear it. I will source his video down below in the comment section. You can go watch it raw for yourself. It's like 20 minutes long. He does share a lot of great points that you need to know because this affects you as a Tesla investor. Full self-driving is going to take over the autonomous vehicle sector, robo-taxis, and all of it. And something that I have mentioned recently I think should not go unheard as well, and you definitely need to know it, and you will know it by the end of this video. So let's go ahead and roll this clip from Mars Catalog, and then we will also, in addition to that, talk about what we can expect for the markets as well as Tesla stock this week.
So here we are. We've got the latest full self-driving beta 11.4.6. We got 11.4.7 coming out next weekend, supposedly. And, I think we're close to a ChatGPT moment. So, what was the ChatGPT moment? Well, OpenAI was working on GPT for a long time. Obviously, there was GPT-1 and GPT-2 and GPT-3 and GPT-4. But nobody really noticed all that much, at least not on a consumer level. Maybe if you were a programmer or a nerd, you might know what GPT-3 was. But most people didn't. Even though they were working on it and improving it for a long time, you could access it via the API and do some pretty interesting things. But the awareness of it was pretty low. Then when they launched the ChatGPT interface and they also updated the model to GPT 3.5 Turbo, people really started taking notice. All of a sudden they were like, holy shit, I can't believe that there's AI that's capable of this already. It seems to be able to reason, to understand in a way that I've never seen from a computer. And now people are using ChatGPT for all kinds of things. If you're a programmer, I think it's indispensable. No matter what you do, just try talking to ChatGPT, especially GPT-4. Pay the $20 a month and try GPT-4 and just start talking to it. Think out loud, tell it what you're doing, and I think you'll be pretty amazed by what the capability of today's deep learning systems is, especially the cutting edge ones. So I think we're really in a similar moment here where the autopilot team has been working on this for a long time, for years and years, and the industry's been working hard for years and years. And there's been a lot of progress. But people haven't really been taking notice because until it can really impact your life, until it's ready for you, why does it really matter? It's so far just sort of been limited to a select group of people rather than the broader public. Oh, so that was good. It had that 25 speed limit sign, but it said maintaining speed for traffic flow. Yes, this issue that has been annoying the hell out of me for 3 years is finally fixed. Thank you, autopilot team. That is fantastic. But see, this is what I'm saying. We're really turning a corner here. The system's now gaining capabilities to solve issues that it's had for a very long time. And, I took my first Waymo ride in March 2021. That was, 2.5 years ago. And when I went and took that ride, I actually drove all the way out to Phoenix from here. I think it's about an 8-hour drive, just because I wanted to try my first driverless car ride. And so I went to Phoenix, and it was amazing to be in a driverless car for the first time. And I recorded a video, I put it on my YouTube. But since then, things have improved. Since then, I've actually tried a Waymo in San Francisco. And obviously San Francisco is dramatically more complicated than Phoenix. So they gave me access to that for 2 weeks. Now Waymo and Cruise have had their permit expanded. They can now operate 24/7 in the city and charge for rides. And I think they haven't really made any changes yet. But Waymo says they're going to start adding more people in from the public. And Cruise says that they're going to be expanding their service over time as well to include the daytime. Right now it's only at night. So there's major changes happening. And, meanwhile, on the FSD side, we've gone from a situation with the early betas where you had to take over many times per drive to a situation where now sometimes you can complete an entire drive without any input at all. And the corrections you do have to make are relatively minor, more likely to be just, hesitation rather than taking over for something that could cause a car crash. So is it 100% autonomous today? No. I want to be clear about that. Sometimes people get upset at me and they say, hey, you're saying autonomy is already solved. I'm not saying it's already solved. All I'm saying is tremendous progress is being made. I mean, just look at it. It's driving. I'm not doing anything. Using just cameras, it's able to figure out what's going on and what it needs to do. It's able to figure out the distance to that car and keep the perfect gap. Not too close, not too far. Just using cameras. This is low cost enough and simple enough to run all the time. So even when I'm driving, it can stop me if maybe I didn't stop in time for the car in front and I was going to bump into it. If there's a car coming from the other way, in terms of cross traffic, it can spot that and it can understand the difference between cross traffic that's not in my way and cross traffic that is on a collision course with my car. And it can respond appropriately. Look how it did that lane change. I mean, it's just incredible. So most people still aren't aware of this. People are actually spending millions of dollars to make sure they're not really aware of how much the technology is advancing. They want to spread fear. They want to say, this is actually dangerous. So most of the stories you'll hear in the news are, autonomous cars are terrible. Tesla's terrible. A lot of times someone's drunk or distracted and they sort of kind of make it seem like autopilot invented drunk driving or distracted driving. And, if a drunk driver, for example, crashes into somebody or, somebody is distracted and they hit something, they'll try and blame the autopilot. Which is kind of silly because I have autopilot on all the time. If I get in a crash, autopilot's going to be on.
So hopefully that was very insightful. I at least thought it was. But something that I really want to highlight is the competition between Waymo, Cruise, Tesla full self-driving. Those are really your three main competitors right now. And obviously, Waymo and Cruise are offering a robotaxi service currently. Now, their scalability is a lot different than Tesla's, right? They have to map out each individual city. It's a nightmare. It's never going to reach the scale of what full self-driving can. And that's where I think the ChatGPT moment actually comes from, because it's going to literally be like one day and the markets are going to realize that, hey, this is going to be everywhere, and it's going to be everywhere quickly. Everywhere meaning robotaxis for Tesla. We're going to be able to deploy in many states and many cities at the same time. That is something Cruise and Waymo cannot do. But competition is important. Competition has led to better products, better innovation, better growth for every single sector there has ever been competition in. So Tesla, I strongly feel, if they had this much competition as they have today, which is still not much, but if they had this kind of competition for the last 5 or 10 years, then we would already have fully autonomous vehicles, because that competition forces you to innovate. It forces you to develop with speed and quality. This is something that is going to hit the markets like a train. And when the markets finally realize the robotaxi is no longer a concept, but actually here, that is going to be a day for the record books for Tesla. And it really wouldn't matter where you're buying Tesla stock as far as price, because the stock's going to be much higher than all-time highs upon that day. And apparently, according to Hallmark's catalog, as well as myself and many others, this could actually be around the corner pretty soon. Elon says by the end of this year. Some of your Tesla bulls expect it could be years away. It could be somewhere in the middle. Could be some point in 2024. That's my expectation, at least. Now, as far as the economic data that's going to be coming out this week that could move the markets, I'm not going to talk about individual bond auctions. That's important, like she said. There's so much money that the Treasury is trying to raise via these bond auctions, it's going to move around the yields. These bond auctions can crash the markets or rally the markets on any given day, depending on how the yields come out. So you want to pull this up on your phone or your computer or whatever, tradingeconomics.com/calendar. And if something happens at a specific time in the markets, usually these bond auctions are around 1 p.m., 2 p.m., or around noon. Usually not early in the morning. They can be, but kind of afternoon, mid-afternoon is usually when you get most of the bond auctions. I would say like 1 p.m. is usually when you get the vast majority of bond auctions, and that is Eastern Standard Time. So obviously, if you're on the West Coast, 3 hours, minus 3 hours to what I'm saying, essentially. But we don't have any big economic data coming out on Monday. Again, some of your bond auctions, these do come out at 11:30 a.m. on Monday. Now, Tuesday, you're going to get retail sales month over month for July. Keep this in mind. The economic data, you want to see it come in okay. You don't want to see this recession if you're in the camp of you don't want the markets to fall, right? If you want the markets to fall, then you want to see bad economic data, and there's a chance that maybe you do get that. Retail sales come out 8:30 in the morning on Tuesday. You're expecting 0.4% month over month. Last month's reading was 0.2%. Retail sales have been quite volatile, and for decent periods of time, you have actually been quite negative. Well, recently you were positive 0.4% in April. In May, you were positive 0.5%. In June, you were positive 0.2%. So you're expecting another uptick for retail sales month over month. If this number comes in negative, the markets might not like that all too much. Now, you're going to get some Fed speakers as well. Fed Kashkari speaks Tuesday at 11 o'clock in the morning, as well as all of this secondary data related to retail sales can also be important, like retail sales excluding autos, import prices month over month, export prices month over month, and all of the other business inventories, all the other things that go along with retail sales. All of that can help move the markets as well. At 4 p.m. on Tuesday, I don't know how much this will actually move the markets, but I want to see this number myself. Overall net capital flows for the month of June last month was negative 167.6 billion. A lot of that probably making its way to the bond market. And the first time you actually see negative inflows for a very long time. You have to go back to June of 2022 to see the last time you had negative inflows. So this was a huge drop. So we do actually want to see that number. Now, on Wednesday, you're going to get building permits preliminary numbers for July. This will come out at 8:30 in the morning. This does not typically move the markets. You're expecting around 1.46 million. The more the better, though, because there's still a chronic shortage of houses. So the more building permits, the more housing that we do ultimately get, the easier it will be to kind of push down or keep a lid on that housing inflation. Now, probably one of the biggest catalysts for this week is going to be Wednesday as well at 2 p.m. Eastern Standard Time, and that is the FOMC minutes. If you guys are unaware of what the minutes are, it's kind of like a transcript of the last Fed meeting. We usually don't get any new details, but if you do, it can move the markets. And the kind of statement we get that goes along with this can move the markets, but it's more like that very volatile reaction, and then the markets just continue on the trend that they were on. If the markets were already negative that day, Well, the FOMC minutes usually doesn't turn that around. It can give you big spikes in one direction, but it ultimately makes that directional move, I found, a lot more kind of volatile, right? So if you're already going down in a day where the FOMC minutes come out, you're likely to fall even more. Vice versa. If you're positive on a day and the FOMC minutes come out, it tends to make that up move a little bit larger as well. So keep that in mind. Coming out Thursday at 8:30 in the morning, Philly Fed data, Philly Fed employment, Philly Fed CapEx index, Philly Fed prices paid. All of this can be important, as well as the Philadelphia Fed manufacturing index. Your -10 here, and this is your manufacturing recession. If you take a look at the chart, I mean, you're in a deep manufacturing recession. So you definitely want to see where those numbers come out, but it doesn't tend to have a long-lasting effect on the markets. Initial jobless claims will come out for August 12th as well at 8:30 in the morning. You're expecting 240,000. If you see a spike here, markets won't like that because it's kind of forward-looking data, or at least not as delayed data as some of the government payroll numbers are. Now, on Friday, you're not going to get anything. So your biggest catalyst is going to be Tuesday with the retail sales, as well as the FOMC minutes coming on Wednesday. Those are your big catalysts that could really drive the markets higher or lower for this week. On top of the economic data, you are going to get some very important earnings. Believe it or not, you're not going to get a lot of kind of big market cap earnings, but you're getting specific earnings this week, and it's from your retailers. In this market environment where investors are kind of fearful about a recession one day, the next day no recession, it's very volatile. Nobody really knows anything. There's a lack of conclusion for anything out there. Well, Monday and after hours, you're going to get Suncor. Tesla has its own solar and energy business. That could be important for Tesla. But Monday after hours, there's not too much that is really important. The big sector that's going to be reporting earnings is your retail. So you have Home Depot Tuesday in pre-market. You have Target Wednesday in pre-market, as well as Zim and TJ Maxx. Wednesday and after hours, you're going to get Cisco. And Thursday in pre-market, you're going to get Walmart. Friday in pre-market, John Deere. So some of your largest retailers in the world reporting earnings this week. We've seen it before, guys. This is not speculation. We've seen Walmart and Target have bad earnings, not last earnings season, but the one before that. And at that time, the markets were trading around the lows. So these guys can be very important for the sentiment in the broader markets, and something that I will definitely be watching closely this week. The next biggest catalyst for our markets that could really send stocks much higher or much lower is the Jackson Hole Economic Policy Symposium for 2023. This is going to be August 26th. And this is when Fed Jerome Powell, it's not like we're going to get a rate hike or a rate cut or anything, but Fed Jerome Powell will get up on the podium and basically talk about future economic policy. Last time he did this in 2022, it was not pretty. The last August is the high of the bear market rally that we had seen at this time, and then stocks hit the lows shortly thereafter. So there's a little bit of fear, maybe worry, heading into the next Jackson Hole Symposium, and this could create some softness in the markets until at least August 26th. Just based off of what happened last time around, it was pretty rough. Last time around, from the Jackson Hole Symposium, and this is where Fed Jerome Powell basically had his like Paul Volcker moment, if you want to compare him to that, and he said, we will not stop, we will continue raising rates as high as we need to, and to even expect larger rate hikes to come, and this spooked the markets. Markets fell about 24% following the Jackson Hole Symposium, and that's where you hit the lows, at least for the NASDAQ. I believe that the S&P lows were hit in October of 2022, but it was a pretty similar drop for the S&P 500 as well. So that is your next big market moving catalyst. As we pointed out in the last video, we don't know what is going to be happening for Tesla, right? Tesla is either going to follow the markets and have an even larger move than the markets, whether that's to the upside. If the NASDAQ, for an example, is up 2%, Tesla tends to be up 4 or 5%. If the NASDAQ falls 2%, Tesla tends to be down 4 to 5%. So I expect that to continue. But if we do get company-specific news on Tesla, that can also be important. As we said in the last video, there's rumors that the Highland Model 3 could be announced that it's going to start deliveries this week. That's a possibility, although probably unlikely. If we were to get that kind of news, that would probably be a big positive for Tesla, and I think Tesla would do very well. Same thing with the Cybertruck. When that news ultimately does come out, it's probably the last moment you're going to have, minus any big crash in the markets, to buy the dip in Tesla. I don't think Tesla's going to be in the 240 range once those announcements do come out. The option activity that we have seen in the last week has a positive order value of 43%, 4,325 orders totaling $3.42 billion. On Friday, you had 805 orders totaling $582.5 million with a positive order value of 36%. So not a great day as far as the option activity or the sentiment in the option activity on Friday. And if we look at Tesla stock today and some of the technicals, the next big level of support is 220 if you break under 240. Tesla stock at the time of recording this video is at $241.90 per share. So you're about $1.90 off of 240. If Tesla falls under 240, well, that could pave the way to about 220. That's the next level you really need to fill. That is where the 100-day moving average is. It's technically at $218.76 per share, but round it to 220, and that's going to be your next big level of support. But you do not get to here to 220 without the markets falling as well. So if you guys want to come hedge out your portfolios, if you don't want to sit on your hands and do nothing while your portfolio drops in value, you can come hedge with us and come join a trading community. Link down below in the description of this video. You can come talk to me. We can have conversations. We can try to figure out what's happening in the markets on a minute-by-minute basis. So there's that. Just wanted to plug myself on that. I don't take sponsors here on the channel. At least we have not so far. So that is a way you can also support the channel as well. So there is that. Again, Tesla's not going to fall unless the markets fall or unless we get really bad news for Tesla. That doesn't look likely. Now, you are getting an indicator of a Head and Shoulders top, and this could set the range as low as about 198, it looks like. But we are in the range where you could be starting to see a bottom anywhere from around that 246 number to around that 198. And you guys can see that highlighted in red right here. It doesn't always have to work out that way, but that is a pretty reliable technical indicator. Now, if you look at the RSI, that is sitting at 39.85. The RSI being this low does suggest that you probably get a bounce sometime here soon. The last time the RSI was this low, you have to go back to really January of 2023 minus this little drop that we've seen back here in April of 2023. But you tend to bounce around this level, and when you do bounce, you tend to go on a pretty aggressive rally. So the best way I'm looking at it, you're just getting a better deal to buy a fantastic long-term business. And that's exactly what I expect to do in this upcoming week. So all in all, we don't have a lot of huge economic data. We don't have a lot of things happening this week. Next week's going to be a little bit more important. But again, Tuesday's retail sales number, as well as Wednesday's FOMC report, will be important. But I think the earnings from the retail giants like Target, Walmart, Home Depot, those are probably going to be the most important thing for this week. And that's probably the thing that could move the markets around the most. So that is going to do it for this video. Hit the like button and subscribe to the channel. And like I said, check out the link down below for the trading community as well. My name is Michael Tyler. Thank you for joining me today, and I will see you in the next one.